All right, so this will cover both June Gold and the June 30-year for the week of Monday, April 29. I'm looking at just going week to week. The midweek update is difficult for me to pull off just because it's either daily charts or weekly charts. I've talked to CQG about customizing kind of a 2.5 day bar where the numbers would change midweek, and they can't do it. So um, my thinking is go weekly and see how that works initially. So it's weekly gold, weekly 30-year. As you can see on this chart, this is the 30-year. I'll expand it a bit. And this is the sort of big picture. I can walk you back here. There's a channel structure here that we settled above about a month ago, and the market came right back. And that indicates at that point anyway a reluctance, obviously, for bullish continuation. But we don't really have an outright sell signal as we look ahead through summer trade, let's say, or through the balance of the second quarter, unless we settle the week below 144.23. Now, 148.21 on the way back up, I don't consider it to be a significant level, and I'll show you that in a moment. If you look at let me actually just pull up the newsletter I've created for it. I've got 148 even actually as my up pivot, and that's only a multi-session containment level. The bottom line with the 30-year is 144.23 is our base of support through the balance of the second quarter, and in fact above that, this market remains constructive. For the week itself, I've got 146.21, which I'll show you in a minute, and 148 even. We're kind of in a two-sided framework for the week itself between these 2 points. And as you see, 148.21 is just a session containment level. I just wanted to show it, just to indicate that there was a reluctance for follow through. There may be yet again. I would like to have, at the time I saw this signal, I was all over it as a meaningful buy signal up to this channel formation over the following, 3 to 5 months. But right now, 144.23 is our base, and there's really nowhere to go but sideways or up from there, obviously. And let me show you some of the near term. Well, let's talk about the possibility of closing below 144.23 at the end of this week. I don't see it, but if it were to happen, then 140.16 becomes the next 3 to 5 week target where the market can actually bottom out through the balance of second quarter, and that is really our meaningful downside continuation point into later year. Um, let's talk nearer term. Actually, let's look at this. If you look at the newsletter itself, once again, I've got 146.21 and 148 even. 146.21 and 148 even. 146.21 is just a simple trend line off the lows that actually held roughly last week's low with some minor slippage. And so I'm calling it a two-star level that can contain selling into later week, and above which 148 even is in reach this week that can contain buying into later week. Now, if we close any day this week above 148 even, then that 148.21 level that I showed you a moment ago, right there, that's in reach within the week. But overall, and I hate jumping around like this, I hope it's not too confusing. If we close the week above 148 even, I think that's a pretty meaningful upward pivot point into later May and possibly June. Now, I don't see the market running away, but we would have then close above 148 even. Don't be surprised to see the next 3 to 5 weeks yield 152.17. If this market really gets underway, then 155.15 is a solid resistance area. That's not in reach for several months, but if we tested it, it can contain quarterly buying pressures when tested. So bottom lining the week ahead, 146.21 bid to 148 even offer, two-sided in between, and a settlement outside that would indicate the next notable level likely by the end of next week. So if we close below 146.21 this week, then you should expect this formation within a week or so of activity, 144.23, where once again we can bottom out on a monthly basis, possibly through the balance of the second quarter. Upside, if we close above 148 even again, then this area is not out of the question over the next 3 to 5 weeks. We'll get a nice rotation high beyond this high. You've got little levels all the way up, but really this structure, I think if we close above it, respect the ability for bullish follow through into later May. And that pretty much summarizes the 30-year. These levels are good. They're well picked. You've got a high of a low here at 147.05. From 2 weeks ago, we settled above last Friday. That's kind of a base of support for a session containment anyway. I think on a dip you can buy that level. And if we close below it, then you should expect 146.21 within several days. So on that note, let's move on to COMEX Gold. This is the June contract. I'm going to go ahead and take a look at this. Is on the chart. This is an ascending 2/3 speed line that's trend defining, and it was a target following the break of this channel structure about a month and a half ago. We settled below it. We rallied back to it, and last week we got down to 1267.9 when this speed line was at 63.5. So that's pretty close to a test. This week for Monday, April 29th, it's at 1265.6. And if you look at the newsletter itself, 1265.6, I'm calling that multi-week containment. It can contain selling through May. And in fact, now that we've come close to testing it and we settled up on the week itself, this market can recover over the next 3 to 5 weeks or sooner into the 1328 area. 1328 is a convergence of the former channel bottom and a new descending channel top that was based on this low and last week's low. So this is the area. If you're looking long term and you want a nice buy signal to the upside in gold, it would be above here. But as I just said, you could call the structure right now stable and even bullish now that we've come close to testing 1265.6. Now for the week itself, let me go back to my charts here. There we are. All right. So we have a descending 1/3 speed line this week at 1290.7. Last week's high was 1290.9, so you've got a little symmetry there. So, we could retest last week's high and then fail. We've got 1277.9 as a low weekly settlement price, and I've got that as a session containment level that if tested could contain session weakness. If we close below it, even on a daily basis this week, then this 1265.6 speed line is in reach within a matter of 2 to 3 days. 1265.6 once again able to contain selling into June, and above which the next 3 to 5 weeks certainly allow 1328.0. And in fact, if we close the current week above 1290.7, which is a weekly containment resistance level, if we can close let's say that let me back up a little bit. If we settle any day this week above 1290.7, which certainly could happen Monday, given the fact that we closed around 1288.8, then you should expect 1301.6 within a day or two. And in fact, we could, on follow through strength, reach 1316.8 within the week. That could be a bit of a stretch. That's this intermediate channel top right here. So if we close Monday above 1290.7, and these are Fibonacci retracement, these horizontal lines, we could reach 1316.8 by Friday's close. It wouldn't be out of the question. We do have precedent in the last month and a half for high volatility weeks. And then ultimately, if we close the week above 1290.7, then expect this 1328 channel top within, I'm calling it 2 to 3 weeks, 3 to 5 at the very most. And that would be a multi-week containment level, as I just mentioned, 1328.0. Now, I will construct a chart here for you just so you can see, and I'll finish with that. This is a weekly chart, by the way. So if we settle above this 1328.0 in the coming weeks, then you're looking for this, essentially. That would be my expectation, 1379 even. So this is 1328, and closing above it on a weekly basis would indicate the 1379 even channel top, where we could top out, through the second quarter, through summer trade into the third quarter. On the other hand, let's take a look at this chart. If we close below this 2/3 speed line this week at 1265.6, then, speed line analysis suggests a retest of the low upon which the speed line was constructed. So I know it looks like a bit of a long shot, but this low here was 1189.3. And so just mark that down. If we close the current week below 1265.6, you've got little levels all the way down, respectable weekly containment levels, probably two or three of them, but ultimately the next several months should actually yield a retest of this 1189.3 from last August. And I do believe that's all I've got to say for this week's gold and 30-year analysis.